You're tuned in to Agriculture Today, and we start our Friday show with a grain market update. And this week we're joined by the senior economist at the IGP Institute, Guy Allen. Guy, thanks for joining us today.
Oh, good day, Shelby.
When we're when we're talking about the grain market today, Guy, starting off with wheat, and we did recently have a WASDE report come out.
Yes, yesterday on Thursday was the April monthly WASDE report. It was a bit mixed. I think today we'll talk about wheat, then we'll move over to the feed grains and then finish up with the oil seeds. Starting off with a bit of bearish news here. The numbers in the USDA report for wheat were a bit negative, the market, and it was down after the report. U.S. alt wheat ending stocks were came in above what the trade average guess was. Came in at 846 against a trade guess of 825, and near the upper limit of the range. Interesting enough, imports were increased by about 10 million bushels. Exports lowered to 15 million compared to March, and so that's going to leave us with a little bit more in the tank at the end of the year. Some noted changes in the export complex. There is another 1 million metric ton reduction in Russia's expected exports. And however, Russia's exports are down 11.5 million metric tons from a year ago. Had a little bit of an increase in the Ukrainian exports by 500,000 tons. But another thing weighing on the markets, China's imports were decreased by about 3 million metric tons to a 6 year low of 3.5 million metric tons. And that's a bit indicative of their larger production we're seeing over there. And we'll see that again, particularly in the corn situation, which is reducing China's need to import grain as they become increasingly self-sufficient on a number of those commodities on that.
What are we seeing for our feed grains?
Well, moving over to the feed grains, just before we move to feed grains, one little note for wheat. We have seen an increase in world feeding of wheat. Um, I think that's reflective of the low prices in a lot of the areas. So we are pricing wheat into the feed ration, which that sort of is the downside for the values of wheat when it gets cheap enough to substitute for corn. So moving on into the feed grains complex, corn, a bit of a different picture there. Corn numbers were a bit friendlier. We saw the market up 5 to 8 cents on the day on Thursday's close. Ending stocks were down about 75 million bushels to 1,465 billion. That's 45 million bushels less than what the trade average was. Exports were increased up 100 million bushels to 2.55 billion. Feed and while domestic U.S. feed and residual consumption was dropped by 25 million to 5.75 billion bushels. Somewhat in line with that report. And keep in mind, this April report was adjusted according to our March 31st stocks report. Those stocks reports are important because they sort of tell us if the tank's half full or half empty, and it's sort of a reconciliation for our balance sheet for those numbers. Um, let's see. In the global market, numbers USDA for Argentina, Brazil, unchanged and steady. Earlier Thursday morning, Brazilian government organization CONAB raised Brazilian corn crop 2 million metric tons to 124.7 million metric tons. Other competitor exports were left unchanged in the April report. And China's corn import numbers were left unchanged at 8 million metric tons. And that 8 million metric tons is on the lower side of where we've been over the last 5 years for Chinese corn imports. That left our U.S. Corn stocks to use ratio, dropped it down from 10.2% to 9.6%, which anytime I think you get those ending stocks below 10%, we're starting to run a bit critical there, which keeps me a bit optimistic for prices going forward through this summer. Any sort of a weather issue, we could see corn prices rally there. I think, though, that weather situation is going to be a bit secondary to the current discussions on tariffs and trade. That seems to be the big news in the market. On the back of that, USDA left the corn price steady at $4.35 for their projected estimate on that.
What are we seeing for grain sorghum?
Grain sorghum ending stocks were left unchanged at 52 million metric tons. For the whole sorghum complex, numbers were basically left unchanged. Exports at 100 million bushels, total domestic use at 225, feed and consumption, food, seed, and industrial consumption at 70, with feed and residual steady at 155. Noted, I think the last month they did raise that feed and residual number up a bit for grain sorghum. Without China there in the market, basis for sorghum is pretty cheap, and we're seeing that price into the feed rations, not only in the U.S., but we've seen Mexico buy a little bit of grain sorghum as well as it's pricing the feed rations south of the border there for us.
And our last commodity to talk about today, soybeans, and what do we see from the report?
Well, oil seeds was a bit neutral. It tended to follow corn today. It was up higher. It was up 10 to 15 cents actually on Thursday's close. Uh, Carry out was down about 5 million bushels compared to last month at 375 million, just 4 million less than the trade average, so came in about where expected. Imports increased 5 to 25 million metric tons. Crush was higher, which that lent a little bit of a support. No change in the average producer price. The USDA is putting out at $9.95 a bushel. Ending stocks for soybean oil were forecast to be about 80 million pounds, a bit smaller than the trade had anticipated. Biofuel use was decreased, though, about 200 million pounds. Food use was also a little lower, which was a bit bearish on the oilseed situation. A little more optimistic on the meal side. That tended to follow corn a bit higher. So a bit mixed there in the soybean situation, but it did follow corn a bit higher today. And looking at that corn to beet ratio at the moment as we're going into planting, uh, definitely favors corn. Soybeans are going to have to compete to buy a bit acres, so it'll be interesting to see what our planting situation is there.
And
Just a
Guy,
couple other things to mention, if I could. I always like to talk about foreign exchange and freight. The dollar's had a very volatile ride this week in the wake of geopolitical issues and trade issues and announcements. We've seen that drop down to about 100 and what is it, 101.3 on the index. Just 2 weeks ago, we were up at 104. So, and it's traded in a very, very wide range. And that's coming in at about a 6 month low going back to October. But look, nothing real surprising there, just a lot of volatility. The other thing that I always like to touch base on is freight and transportation. And let me get to my correct page on that. Quite a little bit of interesting news there on the whole freight situation. Um, Dry bulk freight index was weaker this week. It came in at on Thursday at 1,260, which is that weakness is coming in the wake of these trade issues there as well, as they expect a little less dry bulk commodities to be moving in that. Probably the biggest news in the freight, and I'd put this issue as actually bigger than the tariff issues, is there's been a 301 investigation regarding Chinese vessels visiting U.S. ports and putting a tax on that. That's been in discussion for well over 5, 6 years now, and it is very much a bipartisan issue. And they were going to put somewhere between $500,000 to $1.5 million dollar tax on every Chinese owned or built vessel every time it made a port call in the U.S. Been a lot of discussion on that. The federal government has decided to push that forward. They did not make a decision on that in recent executive orders. It's still a concern. How they're going to address that, still not sure. But I think that was a very good decision because that sort of had the potential to really have a very distorting or negative impact on the whole transportation sector. And for dry bulk commodities like corn, grain, wheat, all our dry bulk commodities, and even our other commodities, predominantly moved on Chinese-owned vessels, had a potential for a very big impact on that. So I was very happy to see that push forward.
Guy, while you're in giving us our grain market outlook, and as someone with the International Grains Program, what's that global perspective that you're seeing at the grain market? What are you really watching?
Well, there's a lot of moving parts right now, and I feel like I'm flying a very complicated fighter jet at the moment to some point because there's just a big number of things to watch, from the commodity price volatility to the foreign exchange volatility is historically high, trade and transportation. Uh, what's farmers' selling intentions, and we assume as they go to the field now farmer selling sort of backs off as they become focused on getting the summer crop in the ground. And so basis does a lot of the work for getting grain to move through the pipeline. So look, there's just a big plethora of issues on the front burner to be watching, and it's a very dynamic situation. And in 24, by the time this comes to report tomorrow, in 12 hours time, it'll probably be old news, and the whole situation will have changed. So it's very, very difficult.
Guy, I appreciate you taking the time to join us today.
Thank you, Shelby.
That was the senior economist at the IGP Institute, Guy Allen. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead.